I think it's more the lack of formal solutions. Traditional institutions in the region are very conservative when it comes to extended products. Sometimes people even struggle opening up a savings account.
Hi, everyone, and welcome to La Frontera, a podcast dedicated to exploring the dynamic startup and venture capital ecosystem in Latin America and the innovators behind it all. We're your hosts, Cyrus and Tom. If you enjoy this conversation, we invite you to subscribe to our newsletter where we announce new episodes and share additional insights and resources for founders and investors alike. We'd also like to invite you to share this podcast with your friends and to leave a review on Spotify, Apple, or YouTube to help more people discover the show. We love hearing from our audience. You can connect with us on LinkedIn and Twitter by searching for La Frontera Podcast. In this episode of La Frontera, we sit down with Andrés Londoño Botero, CFO and co-founder of Monet, a Colombian fintech that's issued over 1 million loans to people typically excluded from traditional credit. Andrés shares how Monet shifted from employer-based lending to using open banking data to underwrite informal workers, and why they only report borrowers who pay on time. We also dive into their journey through Y Combinator, raising capital from abroad, and why building trust is the real moat in LATAM lending. Andres, we met in Colombia Tech Week in Bogota on that bus out to Daniel's finca, which was a hell of a time. We really enjoyed that. What a way to meet some cool folks. So
It was a good tech week.
yeah, that was probably one of my favorites so far. Although Tom could probably talk a little bit more about Mexico Tech Week. But yeah, first of all, before we get started, we want to congratulate you on making the Colombia Early Stage 100 list by New Moon Adventures. We saw that come out over the summer, so congrats on that. But yeah, we want to dive into, maybe we can start with your background, a little bit more about, obviously you went to grad school, you're an economist by trade. And then from there, we'd love to learn a little bit more about how you met your co-founder, Leonardo, and what kind of got you guys to start Monet.
Perfect. Yeah, no, thanks for the congratulations. I think Ivan is doing a great job with this list. He also replicated it in Mexico recently. Yes, no, I studied economics and then I did 3 graduate degrees. I did a regional development, public policy, and then a degree on finance. When I was in university, I thought I was going to be a public servant and go ahead and be a politician or work in some ministry. So that's why I did a master's of public policy and on development. And then things swifted a little bit. I did work for the government for 4 years during the last president in Colombia. But then, yeah, we kick off Monet at my last days working in the tax agency and the Ministry of Finance. And I actually met Leonardo through a former boss I had. He is a friend of Leonardo. He brought us together, and then I brought in my cousin, which is another co-founder of Monet. And in the early days, there was also another guy. So we were a team of 4. We actually launched the product with a different logic. We wanted to replicate pay active in the US. So basically became a payday like loan attached to your wage and your salary. We figured out that was not scalable. You have to negotiate with every employer, then every software where they manage their HR. There were at the times of softwares that didn't have any cloud infrastructure, so connecting was impossible. So then we start venturing into using open banking technology for basically seeing the transactional ledger on digital wallets and bank accounts and try to make that replace the data we will have gathered through the employers on their payslips. And basically, we also venture into automatically collecting from the bank account. So creating a whole payment infrastructure that will allow us to initiate payments and automate the collections through auto debits and so forth. So that's how we pivoted, and that's current day Monet.
That's really interesting. I do have a question about how that works. Obviously, with earned wage access or payday type of or loans that depend on someone's pay, you need access to HR data. Is that right? So do you
No,
guys
I
know?
need
Okay.
access to basically the bank account or the digital wallet.
Yeah.
When where I can actually see the payment going.
Got it.
So currently, Monet serves mostly informal people, not necessarily formally employed. So we look for recurrent income in a digital savings tool, basically.
Yeah, that's really interesting. So do you guys use any sort of like third party or middleware to connect to folks' bank accounts and pull that data? How
Yes,
does
it
that work?
depends. We have an in-house solution for some institutions,
Yeah,
and then we do use third parties for some others. And we are also working to connect directly banks.
that's yeah. Direct connection is probably the best, but obviously the most time intensive to build out.
Yeah.
Yeah, I think that's really interesting because I remember over the summer, that's something that I was looking a little bit more into too, is we have plaid in the United States. I don't think the plaid exists in Latin America. And some of that is tough where getting financial data that I think like in Mexico, banks are a little bit hesitant to allow access to their systems. So I'm not sure what that looks like with Colombian based banks, but yeah, that's what I was curious about is how's that going? What kind of third parties are out there? If that's truly like a built out kind of solution already. So, since you guys started Monet, obviously you guys hit 1 million in loans recently. Where do you guys stand today?
We are well over a million loans granted. We are also, yeah, we have served more than half a million customers, more 700,000. Traction is going well.
So, since you guys have given out more than a million loans, what are some of the trends that you guys have seen so far in terms of repayment or folks maybe not paying their loans? But yeah, would love to. I feel like you have this unique position where you guys have all the data now on over a million loans being given out, how folks have paid it back, and how they're behaving around that.
We are actually, yeah, we're actually strengthening our analytics team. We are rolling out our own risk model assessments based on the history we already have on our loan book. But yes, I think at the beginning, default was high. Of course, we were launching something new, trying some roles. But in the latest months, we have been able to stabilize the losses. But there's still you can see some seasonal effects. There's some months where people are normally laid off and they don't have enough liquidity, but it doesn't fluctuate that much.
What months, just kind of curious, what months have you seen in terms of like seasonality? Like what
January is bad,
oh,
and then there's yeah some mid month like before August or July. It's also
oh, got it. So like right after the holidays and then
yeah some
in the middle
tricky
of the
months
summer.
there.
How do you guys actually fund the loans that you give out? Do you
So
borrow capital or how does that work?
we have done at the beginning it was equity, but we're currently raising debt facilities to find our loan book, which I think is the smart way to do it when you are in lending. I mean, for lending, it's not really sustainable to always finance the operation through equity. You at
Right.
some point need to get a big facility.
Yeah. Yeah, I was asking because right now, I think given the current environment, lending is a tough business, right? It's generally like pretty capital intensive, driven by balance sheet. And today's environment where interest rates are high and there's a lot of like competition for lower rates, especially I guess like against banks who have a like lower cost of capital. I was wondering how you guys have navigated it and been very successful, I guess, like recently.
In terms of our go to market, we target users that are basically unbanked, so they don't have access to a loan. They still have the digital savings, but they don't have any other financial products on top of that. We are not competing with loans from formal institutions. Basically, we're going a step lower in the pyramid. We're not even competing with Nubank because Nubank also target like mid income. We are going down in the pyramid, and we are in most cases the first loan that a user has. And what we do is we only report, so we help them repair or build credit history with us. We only report people that pay on time, so they can appear in the database and access to more products.
So lender of first resort. Um,
Yes.
but that yeah, that makes sense then. You're basically like building out your niche there.
Yes, that's our target.
That's a great segue into my next question, which is around credit scoring and underwriting. So since you guys are one of the first lenders for these folks, how and you guys have obviously have that data, right, based off the access to their bank accounts, you can see recurring income, for example. So do you guys have your own credit models? Are there specific credit scores you can also pull from like other like bureaus within Colombia? Can you talk a little bit more about what that looks like?
Not that there's a big gap. If we
Yeah.
use bureaus, we will have only been able to serve around 30% of our customer base. So yeah, we haven't seen a lot of value in those sources. We rely 100% on the open banking and on financial information. And we are building our in-house models just based with that data source. We also don't think it's good going after, so people go after social media, see what you post, and we have moral issues with those practices. So we are trying to rely on on open banking transactional ledger, the transactional ledger, to make great decisions and help people accessing capital.
Yeah, I feel like if you're going after social media, it sounds a little bit more like the social credit model.
Yeah, but I mean,
So
people do it.
yeah. I remember there was a back in the day, I remember there was a startup based in Africa. It was a female founder and she was basing credit scores off of something related to cell phones. Like they would give cell phones out to borrowers and I forgot what it was like way over my head, but that was something interesting that caught my attention. I think this was like back in 2013, I want to say. But yeah, that's super interesting.
And then backing up a little bit, like looking at the entire lending tech like sector as a whole, it's a huge part of fintech in LATAM. There are lending startups everywhere. A lot of buy now, pay later. There's consumer facing ones like you guys. There's SMEs, lending for SMEs. It makes a lot of sense because consumers and SMEs have difficulty accessing what I would say are like traditional access to funding and like bank loans. You guys target the underbanked. I want to ask you, I think you might have some good insight into this given your master's degrees and insight into regional development, public policy, working in government. What is it about the political, social, economic backdrop of LATAM that makes it so attractive to start a fintech company that's like really focused on credit?
I think it's more the lack of formal solutions. Traditional institutions in the region are very conservative when it comes to extended products. Sometimes people even struggle opening up a savings account because of the requirements of the banks. And now we have a lot of people on the move, migrants that are having trouble in the like in the country where they settle to open accounts. So I think there's still a lack of supply of financial services coming from the incumbents, and just the credit market is just huge. It's almost infinite in Latin America. When you think of countries like Mexico or Colombia, where more than half of adults have never had access to credit, so there's a lot of market opportunity because there's a lot of people not being served currently. It's improving thanks to the advances in fintech and people trying to venture into filling these gaps, but there's still a very huge market where you can still make things and grow and thrive.
Yeah, it definitely reminds me of a conversation I had with an Uber driver, cab driver in Medellin, Colombia, a couple years ago, where he was saying basically he does not have a bank account because when he's tried to open one in the past, they like a bank would charge him to open an account, to put money in the account, to withdraw money, and all of so
And then
all of the
and then
above, right?
probably say, okay, I'm an Uber driver. And then the bank says, okay, that's not a real job. So you're for me, you have no financial value. I cannot extend you a loan because you don't have an employment letter that serves me as guarantee that you will pay me back.
Yeah, so with gig economy workers, so it makes it even more difficult. And
Yeah, and it's people that are making more than the minimum wage. And every week they have their work being paid into their bank account or digital wallet, and they don't get any other service because what they do is not regarded as a real job. So we actually want to help this kind of people that have revenue They're probably informal workers. They have their stand in the marketplace. They have transactionality, and they need working capital to grow.
Have you seen some of the more traditional financial players feel the pressure from Nubank and the likes and start to launch programs where they can lend or open bank accounts for these gig economy workers? Have you seen a change like that, or have you seen policies come through in the Colombian government to build up like infrastructure for that, or what's what's the change looking like?
I feel that trend is targeting mostly the mid market. When it comes to lending, Nubank is still conservative. They tackle people that are middle class and up. They don't really go down in the credit cards. They go lower with the saving accounts. But in terms of credit cards, they're not as flexible as with the saving products. I do see they're cannibalizing with the banks, basically, in that segment. But I don't think Nubank is the first credit card of a user, probably the second credit card of the user. And you do see banks trying to create more digital solutions. There's Bank that is also a spin-off of a banking group. And you have also the incumbents trying to launch different products. In Peru, you also see now digital wallet of the banks like trying to anticipate players coming. So they launch first their digital wallet to try to get to a population where they're not operating. And then you have the other example, Argentina, where it's basically fintechs and tech companies now being the incumbents. You have Mercado Pago, that everyone is eligible for a loan in Argentina with Mercado Pago. And you have Global 66, which is doing a great job in the remittances vertical. Yeah, I think Argentina is leading the game into the traditional
Yeah.
tech companies becoming the incumbents. But then I see the other players trying to enter the market more, cannibalizing the mid market and not a lot targeting the base.
Yeah, that's something I was just thinking about the other day. So I was in Buenos Aires for a month studying, and it was pretty remarkable the dominance of Mercado Pago. Literally, like everyone has Mercado Pago and pays with it for everything. It actually made it a little bit difficult for me. I'm going to complain about being a gringo and not being able to get Mercado Pago account. Some things I actually just couldn't pay for because I didn't have it. And it's amazing, like a private market player, Mercado Libre and Mercado Pago, like creating that and dominating an entire country. It makes sense with Brazil and Pix because that was launched by a central bank, but it's also an incredible story. But yeah, it's definitely interesting how quickly it took over that market.
Yeah, I think part of that has to do with the ever growing younger population. And then I feel like remote work just really helped a lot because in Mexico, we met a lot of folks that were working remotely for companies in Europe. Same thing in Colombia. A lot of folks were working remotely for startups around the world, which is a new way to bring in additional income to those younger folks, the younger generation. And the younger generation is also more digital native. So it's been really interesting to see like the rise of these digitally native banks and other fintechs over the last, let's say, 5, 6 years or so.
Actually, think that the next wave of fintech will be cross-border payments at almost no fee. And Revolut is already announcing it's gonna launch Colombia. I use Revolut
Wow.
as my main bank account, and it's great for cross-border.
Right. Yeah, that's one of the things that I think that is missing as far as fintech solutions go. I think there's a lot of solutions for cross-border payments, but there's nothing without a fee. We also dealt with that being in Mexico City this summer. We were wanting to pay with PayPal or something like that. Got charged a little bit of a premium.
Yeah, and it's
Yeah.
very expensive.
I think this is great because I've seen also like a rise in not only cross-border payments, but a lot of startups using stable coins for cross-border payments. And that's been on the rise, especially because of the attractiveness of the low cost of stable coins to be able to do money transactions between countries, which has been really interesting to see because I know three companies off the top of my head right now that are doing this. And actually at outside VC, we ended up investing in a company based in Mexico that was working with banks to help their consumers do cross-border payments more cost effectively and faster. So they were building the infrastructure for that. So it's going to be really interesting to see which startups really take the lead here. But also shout out to Sinclair, which we also met at that retreat. So I think he's in the
Doing,
space as well.
yeah, he's doing a good job there.
Yeah.
And his business to business, which you don't see a lot of solutions
Yeah.
in that vertical.
Yeah, there's another Colombian founder, Esteban, who founded Zulu. I don't know if you're
Yes, I know
familiar.
that. Yeah, I know that Zulu.
Yeah, they're doing some great stuff in it. They're focused on SMEs in Colombia and cross border, effectively, radically like reducing the rates they pay on cross border transactions. So that's definitely one example.
And I think that's gonna be a trend.
Yeah. Gonna be interesting though, especially over these next couple
By
years.
by 2026, European banks will have to settle real-time incoming transactions from abroad, like from outside the EU.
Oh, really?
Yeah, that's the guideline. They have the deadline of March this year to do it within the EU, settling transaction in less than 10 seconds. Any bank connected to SEPA, and then next year is the deadline for accepting from banks that are not part of SEPA.
That's incredible. Yeah, I feel like the United States is way behind on that. We had Fed now, I think, which I mean has had slow adoption, which I mean I don't blame the banks for, right? They don't have any real incentive to switch over right now to Fed now, but it's obviously going to increase like it's going to be so beneficial for a lot of the Americans because you have instant settlements of transfers between banks, but yeah, it's been slow adoption and I think Powell was on one of the calls, but he talked about FedNow and how it's still, I think there's only like a few member banks right now that are using FedNow that you can transfer between banks and how adoption has still been pretty slow. So that's one of the few things that I do say that I think Europe is doing really well with is just like fintech and finance and just the instant settlements and things like that, but also different environments.
Yeah.
Andres, we wanted to ask you, so we know that you went through, or at least Leonardo and Monet went through YC during summer of 2021. We wanted to ask you about like the decision-making process. So YC definitely has a decent amount of notable LATAM companies that have gone through. So Rappi, Colombian counterpart, Nowports, Happy, Fintual, just to name a few. And so we wanted to hear what was behind the decision to follow in Rappi's footsteps, go through YC, go through an accelerator program in general. So what are like the biggest incentives that you guys saw in applying? And what are also potential downsides? I think it would be really helpful to get your take. I think because I think there's a lot of founders in LATAM that are considering this, right? And there's a lot of different accelerator programs and a lot of ones to, I guess, choose from, but you also have to apply. So they're definitely very competitive. But would love to hear the decision making process there.
YC, I mean, we from the start we want to become a big company, and YC is a big name for startups, and we have seen how companies that goes there like get to a different level, and it's also a great platform to meet investors and connect to people that are basically working on the edge, like on the frontier of knowledge and of technology. So it's pretty exciting, like to get a grasp of that, and that actually after YC we had I would say an easy time raising our seed round just because of the height, and also they also gave important insights. So we start tracking more KPIs and like focusing on the go to market more and be more straightforward with the way we were approaching the market and trying to test different things to sort out what was working for us. So I think that was pretty much beneficial. Probably on the downside can be valuations. I have heard some companies trying to rise around after YC. We were in the peak of venture capital, so it was 2021, where valuations were skyrocketing. There was a lot of liquidity, and right now, like the things have changed, and also I learned more on how to set up the multiples and what they pay for equity. So I think right now it's a little bit rough in terms of valuation, and I have seen this with also a lot of companies like making bridge rounds, down rounds that also went through YC.
Talking about your batch though, I know in the summer of 2021, your S21 batch, you guys had some pretty great companies come through, such as like Toku, Cheapex, Pita Directo, Dollar App. What did you guys see in terms of like cross collaboration between like different batchmates? Do you
I
guys
mean,
keep in contact?
we have had meetings with companies that were in our batch. I mean, there's some that are not operating in Colombia, like Toku, but Toku, for instance, can be an interesting partner for a different market. They have a product that basically is very similar to our payment infrastructure. We have already approached them to see what's their timeline, which markets are they looking at. But yes, I feel we have some communication and sometimes collaboration with other companies.
So did you guys, before you went through YC, you raised did you raise pre-seed? Did you raise funding? Can you talk a little bit about the fundraising
Yeah,
journey?
family and friends. Uh, we raise some money, put some founders' money, and then some friends to get started. Basically, that's how we get the app rolling. The first loans out there, but then everything like start accelerating after the accelerator.
Yeah, that makes sense. So like YC obviously like helped then, right? With basically getting your name out there, intros to investors. And what does your investor base look like now? I guess going through YC in terms of what's the breakdown of local versus international investors? That's something I'd be interested to
Yeah,
hear.
I got right after YC. I think it was mostly from the externals, like not counting us. Most of it, like more than 90%, were from abroad. We did an equity rise in 2023, which was with a local family office that kind of balanced the equation. But yeah, after YC, we got a lot of foreign capital, foreign investors, interesting folks, also people that work with the big unicorns in fintech. So that kind of helps.
Yeah, for sure. And since you're the one who does the fundraising, I want to ask you your experiences working with foreign investors. How much do you have to explain to them about the market that they're trying to or want to invest in, right? The idiosyncrasies of Colombia, the niche that you're targeting and everything. How do those conversations go?
Based in New York, my experience with funds in New York that they're very US focused. So that you rarely find a VC in New York that has some Latam exposure. And if they have, it's like Rapid, Nuank. I
At a
think,
later round.
yeah, later round, I think that for Latin American investor, you have to go to Miami or to the Bay Area. In this side, like in this side of the country, you won't find a lot of investors willing to invest in Latin America or US. And if you're lucky, they'll do Europe.
I've noticed that VCs that end up investing in Latin America usually have a like Latino partner somewhere in the firm, and that's the reason why. That's that's it. I've never seen a firm that, without a Latino partner invest in Latin America. And that's why you tend to see a lot of these firms be based out of, for example, like Texas, right? Like Texas, Miami, the Bay Area, things like that. Like I met someone like a VC in DC recently, and he's Guatemalan. And so he's trying to help out his firm invest more in Latin America. And then there's another friend I know that's based out of Canada, and they don't typically invest in Latin America, but since he's Latin American, he was trying to get some of his firm to start investing more in Latin America as well, which they have made a couple investments in Colombia. But that's the trend I've noticed is, and that it's interesting, which is unless you have like family ties or you've lived there before, like you usually don't have interest in investing in that region, which makes sense. But hopefully that's something that we can change and educate more folks on and get them excited about.
Hopefully, it's getting Atlantic already did the first deal in Colombia.
Yeah.
And also, so let's see how that goes.
Yeah. Exactly. So Talking about fundraising, since you guys have raised obviously in 2021, and then you said you did another raise in 2023, can you talk about any, or I guess, do you have any notes on whether it was easier for the most recent raise? Obviously, 2021 was an interesting year for venture
2021
capital.
is exceptional. I don't
Yeah.
think we'll see that again.
Yeah,
As
that's like perfect.
exceptional times, people were just writing checks like crazy in 2021.
Yeah.
I think right now the water is more calm. Also, interest rates are up. So a lot of liquidity that was taking risk is now in bonds that they had a good 2024 so far, the bonds. So I think capital went back to more stable investments vehicles. And now VCs are taking more time to carry out the due diligence, which is also good. And yeah, no, I think 2021 will never be seen again. Part of
And
history.
yeah. What
Yeah, that's a true correction.
yeah.
Things should go back to how they should be, which is understand what you're investing in before you do.
Yeah.
Um,
So for the most recent raise then, you guys said that you still got quite a few international investors, right? Did you say, I might have misheard you, but did you say French as well?
No, no, friends. No, friends and family.
Oh,
No, for
friends.
the
Okay,
last
friends.
one
oh,
were
French and family.
Colombians,
Yeah.
French relatives.
Yeah.
Perfect.
Yeah, I was like, "Oh, that's
Okay.
interesting."
Well, the last one were Colombians, and we are currently going through negotiations with some debt funds from abroad.
Yeah.
So we are hoping to to raise a debt facility with a foreign company, basically.
Nice. Very cool. How did you guys get introduced to that company? Is that like through your own
They're
research
they're
or?
actively looking for deals in developing markets.
Oh, okay.
So would they approach the FinTech Association in Colombia that they wanted to meet us? So that's
Oh, wow.
they were actually looking for deals in Colombia and like, actively looking for deals. So that's how we got in contact.
I gotta say, I was really impressed with how Colombia really supports the startup ecosystem. At least that was my initial impression when I was in Bogota. I think Bogota they have an arm of the government that, and I forgot his name. I'm gonna have to find it later, but I remember he essentially helped connect investors to fintechs and like other startups in Bogota or in Colombia. And so if you ever needed to reach out to someone and you were interested in investing in the region, you could just reach out to him and he'll connect you with someone within Colombia, which is really cool to see that they have a dedicated office or dedicated folks.
Probably invest in Bogota.
Yeah, I think it was Invest in Bogota.
There's a lot of support, and we have the FinTech Association that Gabriel, the president, have been doing a very good job in also in advancing regulation that more friendly to expand fintech offering across the country.
Yeah, really
But
interesting.
you think even though there is government support and there is like definitely a very healthy startup ecosystem in Colombia, we've talked to a few founders and VCs about this. What do you think about local sources of funding though? I feel like it's skewed towards there's a lot of startups, but not as much local funding. And that's why I guess you have to get connected to
There's no
international
many.
sources.
There's actually no many Latam funds, especially when you go to Series A. You have three funds that
Right.
did Series A in Latam that are from Latam. Most of the liquidity there is for early stage, but then if you're a more mature company, you will have a hard time finding a leader for your round that's local. Probably there's some VCs in Brazil, but Brazilians invest in Brazil.
Yeah.
There's very few cross Latin American investment going out there
Yeah.
because their ecosystem is huge. Like they have a huge
Right.
ecosystem. There's a lot of deals, and but yeah, I think if we still need an equity store for startups in Latin America, we do need to start seeing more liquidity events to show investors that this can be an asset class that can be exit and with a good profit. There's there have not been a Latin American IPO for a long time. I think the last one was Nuan.
Right.
So we need to see either more IPOs or more M&As in order to channel more local funding into risk capital.
Yeah, definitely. No, Brazil, definitely another animal. I'm here right now trying to get the insider scoop, especially in Brazil right now, because it's a whole nother market, right? And all VCs, like typically VCs in LATAM will be Spanish speaking LATAM or Brazil or Portuguese speaking LATAM because they have such a built up ecosystem that supports from like the bottom up. And the market is big enough to, if your company is based in Brazil, you could potentially just exit just from working in Brazil. But yeah, I think like most of the Spanish speaking LATAM funds, it seems like they're in Mexico or based in Mexico versus there's a few sprinkled in Argentina, Peru, Chile,
I mean,
Colombia, but
Argentina
that's
has the Mercado Libre VC. Basi-
right. Yeah. And a question on what you said. So this is something that we've heard a few times, right? It's definitely early stage funding and makes sense why local funds would be the ones to find early stage companies and be able to at least raise enough money from LPs that they'd be able to invest smaller amounts. But that big gap is Series A, right? And that's where you need international investors to come in. Do you think why the reason why there's not Series A through B like funds in LATAM is simply because they're not able to raise a sufficient amount of capital to actually grow and scale companies and invest in companies like at that sort of round? Or what do you
Yeah,
think the is behind that?
I all think that's one of the reasons. So the fund size in Latin America, they rarely go over 40 million, 50 million. And then having shots for that will give you less shots if you go to Series A than if you take pure bets into an earlier stage and write 500,000 checks. And
Yeah. I was working with some folks over the summer, and we've noticed that a lot of the funds that struggle with raising from, whether it's endowments, large funds, wealthy families in Latin America, a lot of funds seem to be struggling with that because there's only so much capital to go around within Latin America. So a lot of funds have now reached out and are trying to raise from LPs in the United States and globally. But when you start doing that, sometimes there can be limits on how much you can deploy of that capital in Latin America. For example, if you go to pension plans in the United States, there's like restrictions about how much of that you can actually deploy outside of the United States, which seems to be limiting then it's the same issue, right? Like you're then limiting the amount of funds that get back to the founders and the other funds in Latin America. I don't know. I think that's something that I'm hoping changes soon because it's just like this vicious cycle of founders not being able to raise the funding they need and then funds running out of the funding that they need. And then when they go raise from folks internationally, it just seems like a lot of them have limitations
I
around where
think
they
we
can
need the
deploy.
exit stories. We need the
Yeah.
exit stories. Like more companies going out there and basically providing liquidity to their early investors in Latin America.
All
Yeah.
right, your move, Monet.
Yeah.
Now that's our target to IPO.
Yeah. I think, and actually mentioning IPOs, I think that's part of the challenge nowadays, right? I think even in the United States, the target for an IPO has like consistently crept higher and higher. And so you're seeing less and less IPOs in the United States. And
But
if they
in the
do,
in the US is for a different trend than in Colombia, than in Latin America. The US people are postponing IPOs because there's currently a lot of liquidity in private markets.
yeah,
But in Latin America, there's no liquidity in private markets. So you're still getting
What-
pretty good valuations in the US currently
yeah,
because private funds are basically outperforming other funds. And there's currently a hype. So companies, they still get funding. So they keep private for longer
yeah.
because there's a lot of liquidity right now in the US going to private markets.
Yeah. What have you seen then in terms of M&A and acquisitions of startups that have become profitable? Are there any examples that you've seen in Colombia, for example?
From M&As, I know they have been acquiring small companies. Like, for example, Carry, this logistic company, they acquired a company in Brazil recently. I know some sort of example like that, but I don't have on top of my mind a big exit example, like a big M&A of a big company. No.
Got it. Yeah.
I know there have been some movements with small companies, but
Yeah, LATAM represents 1% of all M&A transactions in the world. So it makes sense why you haven't seen a lot of it. It's 50% US, 1% LATAM. We'll get to that on another episode and people trying to spark that sort of development in private markets, but as of now, not super liquid. And I have another question for you, Andres. If your goal is to IPO, how do you think about that? You're operating right now in Colombia in a pretty specific niche. Like, how do you think about the plan to expand and scale to the point where you would be able to IPO in the US?
we still have some margin for growing in Colombia, and we have currently closed some very important alliances that would allow us to grow faster. But we are looking and doing research to other countries in the region where we can replicate the infrastructure we have for payments and open banking. And that's actually one of 2025 plans is to put a solid fit into a second market and start growing regionally. Because I think Latin America has the same problem that the base of the pyramid is informal. They lack access to lending and to other financial products. Still in Mexico, there is still a larger rate of unbanked people than in Colombia. In Colombia, people at least have digital wallets. In
Yeah,
Mexico, there's
Mexico and Peru are still at 50%.
yeah, but now Peru has the what's the name, Kushki, the digital wallet in Peru.
Yeah,
Mexico is lag behind in savings for people that are in the base of the pyramid.
got it. It basically means, yeah, when you think about eventually getting to that IPO target in LATAM, starting in a market like Colombia, like it's first obviously establish yourself in Colombia, and then it's expand to other countries, try to replicate, even though it's probably not the exact same plan. Like different countries are gonna want different products. They're gonna have different like segments that you're gonna want to target, but that's how you think about it, is just expanding across the region first.
Yeah, I don't think you can IPO only from Colombia.
No, I think it's even difficult to IPO just from a bigger market like Mexico, especially with all the competition of fintech companies there. But that's good to hear. But yeah, I think we'll wrap it up here. Thank you so much, Andres, for your time. We definitely got a lot covered, and it was great hearing about lending tech, fundraising, and all that good stuff. So good luck to you guys, and sounds like you're doing some great work over there at Monet.
Thank you. No, thanks for the time. I'm excited to listening to the first episode of La Frontera podcast. It's very amazing what you guys are doing.
Yeah, thank you. And before we drop, we want to make sure that you also get some love. One, where can people find you? How can people reach out to you? And then number two, do you have an ask for folks, or how can folks help you?
Just LinkedIn. Find me on LinkedIn. We can connect there. And not for the ask. If you want to build ecosystem, just reach out with Andres Cano. He's doing a very good job to get Latin American entrepreneurs in New York to get together. So yeah, join us and let's help each other to build an ecosystem and to create all those exit and equity stories we need to channel more funding into a region.
Exactly. Yeah, shout out to Andres and Daniel at Pigma. Thank you for tuning in to another episode of La Frontera. We hope you enjoyed the show. You can listen to more great conversations on our Spotify, as well as on your other favorite streaming platforms. You can find us online at lafronterapodcast.com, and make sure to subscribe to our newsletter for show notes and to stay in the loop for new content. Ciao for now.